tell me about Tesla in 2024, and then you maybe include that because I know you don't just look at Tesla, but you have this video about the bulletproof investment in 2024. So, if people were thinking about what should they do for 2024, looking at the broader market, I assume, what was your recommendation?
Well, it's not specifically a recommendation of specific companies. The video was a tool for investors to use. So I'm trying to promote people to think in the format of a process rather than a specific stock. So the idea here, that video was basically what's the process to build something that's going to last you for years. Now, the 2024 is basically SEO, search engine optimization. So we come up on search as creators because we want to get exposure, right? But the idea is like, how do you build a bulletproof portfolio, something that lasts for years?
Okay.
And doesn't, you don't want to be flaky. You want to be very formed. So, and the lesson I want to teach people is like, look at what happened, right? Tom Nash, 2021, pushing Palantir. Tom's a genius. Everybody loves Tom. 2022 comes in. Palantir drops from 35 to 6. Tom Nash, you're an idiot. We hate you. People unsubscribing, like videos, angry videos. 2023 comes in. It jumps from 6 to 20. Tom, you're a genius again. I mean, come on, give me a break, bro. Come on. Now, during that time, I haven't sold I didn't sell anything. Stayed the course. It didn't really bother me. There were other people who were in the community who sold. I don't care about that. But the idea here is very simple. Why didn't I manage to stay in despite this craziness? Because I had a process. The process is something very simple, like, and I teach in that video, is look, it starts with bottom to top. So you look at your life and you say, okay, if I'm running my life, I should run it like a company, right? Every company, especially public company, they have to have a budget, right? They have to have an audit of the budget to see that they conform with the budget, and they have to make a new budget every quarter, make sure that they stand with it, et cetera, et cetera, et cetera, et cetera. Okay, as an individual or household, whatever it is for you, right? You'd be shocked how many people do not manage a household budget. It's just shocking to me how many they don't. And I was like, dude, before you even talk to me about the stock market, let's see your budget, okay? Let's see how much cash flow you generate, right? How much revenues you got. What's your fixed costs, right? What's your variable costs, et cetera, et cetera. Let's build a budget and let's see what your free cash flow is as a household, right? Cool. So we figure out what your free cash flow is as an individual or household. Nice. From that free cash flow, we start taking apart. Okay, how much money you're going to spend on having fun or buying, stuff that make you happy, whatever, traveling, whatever, right? And how much is going to go towards your future, right? Your future being basically savings and stock market, right? So let's say that $1,000 a month you are comfortable allocating to the stock market. Notice that this 1,000 didn't come out from your savings. It didn't come out from your food, from your rent. It's basically money you can spend on buying PlayStation video games or whatever, traveling, right? So that 1,000 is what you put in the market every single month. Cool. From that 1,000, let's pick the companies you want to invest in, not based on price, not based on hype, not based on FOMO, not based on anything. Let's pick good businesses you want to own. If you were to buy Tesla as a company, as Warren Buffett, right, for example, would you have bought Tesla as a whole company? Would you have bought Palantir as a whole company, right? Let's find businesses that make sense to own because they'll dominate in the next 10 years. Even if it's overhyped, the price is too expensive, it doesn't matter. The price, let's just look at good businesses, right? And in any case, so, okay, let's say we pick 5 companies and each company gets an allocation of $200 per month, right? So every month, those 5 companies you've picked get $200 automatically deposited. And that basically creates a process. Now, from that point on, you basically say, well, okay, I'm depositing instead of 200 every month, I'm depositing 160. Why? Because I'm saving $40 on the side. Why? Because you run a weighted average with every stock you invest in. So let's say you want to invest in Nvidia, right? I don't know why would you in this price, but again, it's a good company by my system. You say I ignore the price. It's a great business. They'll dominate. They'll be relevant. Sure. Let's say you want to buy Nvidia, right? But Nvidia is super, super expensive. It's trading at ridiculous multiples. So how do I reduce my weighted average my average cost in the stock? Same with Tesla. Same with Palantir, right? Well, you start buying without trying to time the market, right? The share price goes up, goes down, goes up, goes down. Nothing goes up parabolically, right? So you can try to time it, which I think is statistically impossible. That's gambling. Or you can just try to buy it along the line as it goes up and down. If you just buy it along the line as it goes up and down, you'll have the average price during the whole time, which is much lower than the top, but much higher than the bottom. But if you say, I'm going to be buying at an accelerated pace when the stock price is down and at a reduced price when the stock price is up, then my weighted average at the end of the process within 10 years is going to be much closer to the bottom, whatever that's going to be, right? So I'm essentially kind of timing the market without timing the market. So
Yeah.
the way to do it is like you say, I'm spending $160 every single month on investing in Tesla shares, right? And I'm putting 40 to the side, and I'm creating a bank. And that bank exists on the side as cash that I'm going to use. When I'm going to use it, when a stock within the
Yeah.
5 stocks I have drops below a threshold, with I determine that threshold, and everybody has their own threshold. But for me, for example, it's a 10% below the 52-week high. So let's say right now with Palantir, it just broke through a new 52-week high today. It got into $20 per share, right? So in that case, my new threshold is $18. Every time Palantir is above $18, like it's right now, I'm spending 160 a month. I'm not doing anything different. But the minute Palantir hopefully drops because of bad earnings or something happens that dips the stock below $18 next week, hopefully, then I'm going to be doubling down. I'm going to taking from my bank that 40 I put in every month and accumulated. I'm going to use that to double down and buy 320 because I'm in double down territory. So in double down territory, I'm not buying 160, I'm buying 320, and the cash is coming from all this dry powder put on the side. And that way, I'm accumulating 5 companies that are going to be solid, and I'm making sure my cost basis in each of these companies is going to be closer to the bottom. As the longer I stay, the closer it's going to be to the bottom. And no emotions, no anxiety, no panic, no FOMO. I don't get scared when it goes down. I don't get excited when it goes up. It's automatic, absolutely mathematical formula, because our own, we are our worst enemy. There was this famous study by Fidelity. They tested like all the portfolios, and they've found out that the best performing portfolios were by dead people, people who forgot their passwords. I'm not even kidding. It's ridiculously crazy, right? Look at the biggest Tesla bulls that have made money. Dave Lee, right? Or Stephen Mark Ryan or Farzad. They haven't sold a single share. I know a guy like that. One of my relatives is an IPO Tesla investor. He hasn't sold a share in his life ever. And he's not even thinking about it. He needed to buy a house, and some money that he needed fell through. He wasn't even thinking about selling Tesla shares. He took out a loan. So
Mhm.
longevity in that, that mindset is like, as an investor, as a long-term investor, you want to eliminate emotions, because
Mhm.
emotions are where you're gonna screw up. And if you do that system, you create a portfolio that's strong. The cost basis is going to be by definition lower than the average, and you're going to create something that can serve you when you retire, instead of chasing that quick gains and the profits and the swing trade and the options and all that stuff. So that's how I like to
I
play
love
my
it. Yeah.
game. I don't like to play the short game.
I like this so much. So it's a modified dollar cost averaging approach that then maximizes or yeah, increases the probability that you'll buy lower than the average, closer to the low.
Yeah.
I like this. It's the first time I've heard of that. I think that's valuable information for many of our viewers. I really appreciate that. I've not heard that before, and I think I might
Hmm.
apply. I like the idea, which is you're going to buy high because like you said, it's a good company. It's going to go higher than that. I've always bought Tesla at its height, at its all-time high. If you really think about it, every time I've been
Yep.
buying for 10 years, well, the price where it is today, I bought at that time, it was the all-time high at that time, but it's no longer the all-time high today because it's a good company. It's growing, it's already
Hmm.
an exponential curve. But at the end of the
Yep.
day, stocks go up and down. It's very volatile, as we saw last year, 300 to 100. And so but that's what you do. So I love that very much. Now let's talk about
People
Nvidia.
made fun of me pre-split. I said, "Oh, it's a less chance to get it at 800 pre-split," and people were like, "Oh, Tom, you're a moron!" Like when they dropped to 100, and like it's the same thing. Like people are very short-sighted. I don't mind honestly, but like,
Sorry, stop. You actually thought and knew that it might fall to post split 100. Is that what you
no,
said?
I didn't know it's gonna fall.
Okay.
I tweeted before the split that 800,
Okay. So 200 something, right? Yeah.
yeah, and then it dropped to 100, and people are like, "Oh,
Right.
Tom, you said you're an idiot." I said, "No, my guy, you're missing the point. This is your opportunity to go from being a cynic who's sitting on the sideline complaining to actually, this is God giving you a second chance, and you're missing it by taking shots at me. Just buy the stock. I can't, you know what I mean? It's like, and like, dude, this is like God giving you another chance when they drop to
Yeah, I
100."
love it.
And then they change the tune, and then they say, "Well, oh, it's finally collapsing. I'll get it at 70." Well, good luck with
Right.
that.
Is that funny? Yeah, people were saying that too. It's 100. Oh, wait till it's 70. No, I mean, yeah, you put yourself out there as I do too, and you will get pot shots because it's just, hey, it's a conversation you're
Yeah,
creating. And no matter what you say, it's going to be the wrong thing because it's either too bullish or too conservative or whatever it is, like people will
bro.
say.
I'm Russian. For me, when people say mean things about me on the internet, that's the least of my concerns in life.
That is funny. I guess so. But no, I mean, yeah, yeah. It's no, you're an interesting individual because you're because when you say I'm Russian, there's that mentality of being conservative, being very careful about your assets, but at the same time you can be very bullish too in your statements.